What's up, everybody? As you can tell, today I'm going to do a little something different and start showing some analysis, some psychological training behind trading. But today, let's get into what you already see on the chart here. And what do we have? Okay. We've got the golden cycle of accumulation, the zone between 15K and 30K. This is where you want to DCA in aggressively as possible. It's where a lot of money can be made in every crypto winter. Next, you see on the chart is the trigger point, 25K trigger point in this particular case. Trigger points happen every $5,000 in Bitcoin. I'll get into what that is in a moment. But right now, let's move on to the three bubbles. Those three bubbles are the pattern of three, which happens regularly in almost every chart you'll find. The bubbles are actually clones, so they're all the same size. And they're movements, obvious movements. What's going to happen here is this is going to repeat this pattern over here, maybe even all the way to the next drop, which, by the way, we are going to drop in price. Yeah, that's a prediction if you want to call it that. You'll see. The pattern will play out over here, somewhere over here. It'll drop down probably about the same length as this right here, give or take. So the analysis part comes in here. I use 4 tools. As you can see, the MACD down here, regular candlesticks right here. The other tool I use is Heikin-Ashi candlesticks. We'll get into why in a moment. And the last tool that I use is the Fibonacci tool, which I won't be demonstrating today. So why do I use these tools? Well, let's start with the MACD. I use the MACD differently than other people. First of all, I don't use the 12, 26, 9 setting, or the 3, 10, 16, or the 5, what is it? I believe it's 34, 1. Something like that. Anyway, I don't use those settings. I use 6, 10, 6 for a very particular reason. During 6, 10, 6, you see this consolidation right here? If you look down on the MACD, it looks almost like a snake. Again, over here, another consolidation, almost like a snake. Over here, again, really tiny, right in this area right here, there's another little consolidation. So I use the MACD as a consolidation confirmation tool, mostly. The other tool, the Heikin-Ashi, is my other consolidation confirmation tool. It's really plain to see. It's also my trend tool. Lets me know the overall trend. Like if you look in the blue bubble right here, and right here, you'll notice that the majority of candles are green in each case. When you switch back to regular candlesticks, big difference, especially over here. A lot of noise right there. So it's hard to tell the overall trend until you go Heikin-Ashi. And you can see, okay, yeah, we got more green in here than red. So yeah, overall trend is pretty much this direction. And boom, yeah, it is. So this is what I use to chart trends. The other two tools, and this one as well, are used to confirm consolidations. Now, why do I want to confirm consolidations? Why am I even concerned about consolidations? Because for the most part, the market only does three things, and not for the most part. It absolutely only does three things. This is an absolute. No ifs, no ands, no buts. And I'll show you right now. Contraction. Okay. This is the first thing that the market does. It contracts or consolidates, whatever you want to call it. I usually call it a consolidation. Then out of the consolidation, it goes into expansion. And then from expansion, it goes into trend. Back into expansion and into trend. No, this is not a consolidation here. It may look like it to some of you. It is not. So it goes into more expansion, back into trend, more expansion, trend. And where are we going to go? Let me see. More expansion here, more expansion there, more expansion. And then right here, we go into a weird consolidation where it consolidates, spikes, and consolidates again. So normally I would consider that whole area, including the spike, a consolidation. Then from the consolidation, it expands, goes into a little tiny trend there, back into expansion, more expansion. Well, actually, you could call this a small downtrend. This is a small uptrend, more expansion, and into consolidation. As it comes out of consolidation, it goes into a little bit of an expansion and little expansion right here and back into trend. Trends the other way. Expansion. No, this is not a consolidation. I know it looks like it, but it's not. Look down here on the MACD. You'll see that it's not going into a snake-like pattern. Not a consolidation like it is over here. Intertwining, looking like a snake. Intertwining, looking like a snake. Even through here where I said it spiked, little intertwining there, the spike, intertwining again. So back over here, intertwining, just like a snake. Those are powerful consolidations. When it looks like a snake laying flat, very powerful consolidation point. So let's talk about trigger points. What happens at a trigger point, and why do I call it a trigger point? Because on a trigger point, what you can almost always guarantee is that you'll get a bare minimum of a 2-hour run on that bounce. Notice I'm on the hour chart, and that's why I said 2-hour run. You'll get a 2-hour run, bare minimum. In this particular case, all the way over to here, I believe it's 8 hours. 1, 2, 3, 4, 5, 6, 7. Yeah, 8 hour, and then a nice long candle here. That's what happens at trigger points on either side of them. It bounced on this side and went the other way. Same exact thing can happen. A lot of times it'll hit a trigger point and go straight into a trend and have multiple long candles. You'll see that in the bull run. Obviously, right now we're not in the bull run. That's coming up in 24 and 25. If history repeats itself, which I very heavily rely on. I'm a big fan of history repeating itself, a big fan of patterns and cycles. And the reason why is because you humans are indoctrinated into patterns and cycles at a very early age. Depending on when you were born, the first pattern you're going to see is the holiday, and then the birthday, and then it goes on in patterns that keep repeating themselves. By the time you're 30, you built up a programming of patterns that you do on a daily basis. You get up, you brush your teeth, you have breakfast, coffee, biscuits, whatever. You have your patterns and you go through them religiously all the time. You do the same thing. You carry that very same mindset over into trading. This is why the market moves in cycles and patterns. This is why I watch cycles and patterns and history. History repeats itself very strongly in Bitcoin USD. That's why I'm a big fan. If you don't believe me, just look backwards at the last three all-time highs. How did they react? How did the market move? It moved in the same way that it's moving now. In 2024, the bull run will start. It'll lap over into 25, and somewhere in there, we're going to find a new all-time high. I'm imagining, barring BlackRock being approved and whoever else out there is applying, barring those being approved, which would actually send the price skyrocketing, I'm looking at 95, 100K as the ATH. If it goes above that, let's say it goes to 150K, then this zone that you're looking at, the golden cycle of accumulation zone, will move up, as will the zone that's below this, which is where we find the bottom all the time, and I call that the black hole. Reason I call it the black hole is because for some reason everybody panics, and I think the biggest reason is because that's what the media puts out there. Oh, it's time to sell. It's time to sell. If you've got Bitcoin, it's almost never time to sell until you hit your profit target. That's when you sell. If it goes against you, you hold out. You wait until the cycle returns. It's returning. It's done it multiple times. That's why I said, look back at the history. It's all right there in black and white. That's why I'm a big fan of history, especially in Bitcoin. I can't express that more. For me, it's kind of like the Holy Grail. You guys always repeat yourselves. I mean, every year you have your same holidays and celebrations, your birthdays, and you pretty much do the same thing over and over and over again. And that's why you see it here in the markets. That's part of what drives the market. That's part of the market psychology. It's nowhere near all of it. There's another side of that I'll get to in another time, probably the next video. But for right now, you're seeing that I track consolidations. You're seeing that I track patterns. The reason that I track consolidations is because consolidations can only be formed by one thing and one thing only. It's another absolute. The only thing that can make a consolidation or a contraction in the market is institutional players reshuffling their books to make money for their most expensive clients. That's what's going on right there. And I'll give you a little heads up warning. Never, absolutely never trade during a consolidation period. It's the worst time for you. The absolute worst time is to trade during a consolidation. That's the other point that I can't stress enough. Never trade there. It's just dangerous. People do it all the time. People lose money there all the time. I don't know anyone who's like trading consolidations saying, yeah, I constantly win during contractions and consolidations. That's where I'm making my money. Yeah, no. For one, the range is too tight. Maybe if you're a scalper, maybe. And even then, I'm saying no. I completely and totally stay away from consolidations. And I believe everybody should. It's just not a good time to trade. I prefer trading with the trend. You know the saying, the trend is your friend, that'll turn on you in the end? Okay. I prefer to trade with the trend and look for it to hit its turning point. And we'll get into that a little later on too. That's where the Fibonacci helps out. Okay? Because institutional players love to play with Fibonacci. They love it. It's where they live. They live in contractions and consolidation and in the Fibonacci. I'll point that out in later episodes. But for right now, I think I'm going to close it up. Until next time, this is the Dark Sage signing out.